All right, welcome to today's TruStage webinar, Smarter, Faster, Fairer with AI Automated Credit Underwriting featuring Roman Nazawis. And I know I said that wrong.
Nazarevich, but
Apologize.
Roman is just fine.
All right. And Roman is the Director of Client Engagement. In this role, Roman focuses on building long-term strategic relationships that deliver value to credit unions and their members. He brings over 2 decades of experience in the financial industry, with primary focus on credit unions and an emphasis on strategic growth and client development. Prior to joining Zest AI, Roman held a leadership position at Q-Night Financial Technologies. Roman's professional background includes positions with several well-respected organizations, including Fiserv, CheckAlt, and PSCU. Welcome, Roman, and the floor is yours.
Thank you, everyone. Good afternoon. Again, my name is Roman Nazarevich, and yes, that actually is the spelling of my last name and not line 9 of an eye chart. Thank you for your time this afternoon. So yes, I'm here to talk about the use of AI and machine learning, how that helps credit unions with automation, inclusivity, as it relates to underwriting. So as for today's agenda, we'll start off with the history of AI. Then we'll move into the broadening the pool of borrowers. How can you safely expand access to credit, deliver consistent and inclusive decisions, and make ultimately quicker lending decisions? As Dean mentioned, I have over two decades of working in this space. Actually, my first entry into the credit union space when I was a child, I had my share account open, but it was in 1988 when I graduated high school. And that summer, I got a part-time job working at a credit union as I went into college, and worked there at a branch office Tuesday nights, Fridays, and Saturdays. This one location, the hours aligned perfectly for my class schedule typically. And it was really where I understood and learned the motto of people helping people in the credit union space. It was a small, narrow, but long branch. And the reason I say this, what I found to be amazing was there were 3 teller windows. When you walked in, there was the reception desk, 3 teller windows, myself, Adrian, and Lydia, and then a little cubicle that was for opening accounts and, for the loan officer, and then the branch manager's office. And we had a drive-through window. But what I found amazing was, and this is going back to the days of passbooks, the members that would come at the beginning of the month for Social Security, pension checks. And there were a lot of elderly at the time members at this specific credit union that lived in that part of the city. And, they would wait for me or for Adrian or for Lydia, but they would literally at the beginning of the month where the line was out the door, would wait for the teller that they made the relationship with. And I was amazed, as I mentioned, how, that couple would wait for me. And then I found out about, their kids and their grandkids, who was graduating, who went where. And it was really where, I can honestly say, I just thought, how wonderful is this, what credit unions deliver, and the bond you build, especially in those branch relationships with the members that actually would wait half an hour just to come to your window at the busiest time, if it was a Tuesday night, Friday, or Saturday, especially at the beginning of the month. So that was really where, again, I started, and then spent several years with Fiserv on the core processing side, and then on the payment side with Fiserv Card Services, and a lot of years with PSCU Financial Services as well on the issuing side. So very excited to be here with Zest and the work that we're doing with Zest, helping credit unions. So again, as I said, I will walk through this presentation. So math has been evolving over time. We've gone from basic math to statistical models and logistic regression models. The benefits of better math, the advancement in math have been happening for quite a bit of time. I think, if we look back at Siri or Google searches, that is the advancement in ultimately better math and being able for us to utilize that. So again, as I mentioned, we've gone from basic math to these statistical models, and that's really where it was actually machine learning has been around for much longer than I think majority of people think. It was back in 1959 that a gentleman by the name of Arthur Samuel popularized the term of machine learning. He actually designed a self-learning checkers game. So again, we've been utilizing this realm for quite longer than I think a lot of people think. And I think today, especially with everything we hear on the news or anything we might read online, AI, machine learning. I think one of the things that probably pops into everybody's mind is the movie Terminator, right? There's this thing that's running around that no one can control, or that black box that's sitting in the corner of a computer room that's doing something that no one can control, that no one knows what it's doing. But for the purpose of today's presentation, everything I'm going to be talking about, everything I will be presenting is what we refer to as supervised AI. It is fully transparent. It is fully explainable. It has to be in order for it to properly work. So as time has progressed, it's amazing to me where the use of AI and machine learning has popped up everywhere. This is an example from a military perspective, and an investment that the Department of Defense and other private companies made in the 1960s. But this is a 105 millimeter howitzer cannon. This is known as an area weapon. It's using ballistics, trajectory, gravity to get to hit an area. It can't hit a specific spot within an area, but to hit an area. And that's why you have several of those cannons lined up with the Marines. So what they're using here, this is an example of just using basic math, trying to hit an area, again, not specific. That's why you have several of the cannons lined up to be able to hit an area with some kind of consistency there. So what has AI and machine learning done? Well, that's moved us to where we are today. Machine learning, again, artificial intelligence takes over. This is an M61 Vulcan that utilizes AI and radar. So this is on all modern warships. This M61 can sense if it's enemy coming at you, if it's, and even a trajectory is coming at the ship from, let's say an airplane or something, it could go and it could cancel everything out before it ever hits or does any type of attack on the ship that it's protecting. So there's an example of artificial intelligence. There's an example of radar and machine learning, of how that's again, and the DoD back in the 60s invested a lot of money and time. You know, today, if you even look at it, they have washing machines that utilize artificial intelligence. I mean, it will recommend based on the load of laundry that's in there, how long it should wash it, and then based on that, it even, when you throw it into the dryer, based on the washing cycle, it's going to say, okay, this is the amount of time you're going to need for this to dry. So to me, like I said, it's just been amazing how AI and machine learning have been around us for quite a bit of time. And so, as I said, again, everything that we're going to talk about today is supervised. But as far as it relates to what is the definition of AI and machine learning and then deep learning, everything we're talking about today really is on the first two subjects of artificial intelligence and machine learning. The deep learning is just part of the whole spectrum. We won't really get into that, but I will explain at a high level what we mean by all three. So again, AI, what is the definition? A technique which enables machines to mimic human behavior. Again, it's just trying to be like we are, right? We have to think, if there's an obstacle in front of me, I have to somehow try to get around it, or I don't want to walk into a wall. Machine learning, a subset of AI which uses statistical methods to enable machines to improve with experience. So I think some great examples of machine learning. I'm sure all of you, if you're writing an email, and let's say I'm writing an email to my colleague, Judy Lynn, and in the email too, I put in Judy Lynn, and as the minute I say hello or hi, it says hi, it puts in Judy's name, or if I have to send it to two individuals, it'll say hi, Judy, and hi, Mike. I think a lot of us are also used to movie searches. If you're in Netflix or any other kind of search engine, back in the day, I'd be like, wow, how did it know I wanted to search for that? So that is what machine learning does. It's trying to be predictive. It's not being restrained to a set of rules like if this, then that type of scenario. Machine learning is trying to figure out on its own without being again, held to restrictive areas to try to figure out what the next thing might be. And the same is true Home Depot, Lowe's. You might be searching for paint, but as you search for paint, it'll also bring up, well, you might need tarps, you might need the tape, you might need brushes or rollers, and everything that's associated with painting. And then that leads us to the third and final, deep learning, which is a subset which makes computation of multi-layer networks feasible. I think a great example of this is self-driving cars, right? That self-driving car, I live in the greater Phoenix, Scottsdale area, and we have Waymo here, and I forget what the other company is, but I know Waymo. And it is somewhat surreal to, be walking down the street and you see a self-driving car. There's no one in it. They still every once in a while have people behind the wheel, but actually recently, a few weeks ago, my wife and I went out to dinner, and one evening we saw just a Waymo with no one driving it. But the car has to realize, is that a stop sign? Is that a red light, yellow light, a green light? If it drives down the same street like some of us do every day to go to our work or wherever it might be, one day there's no pothole, the next day there's a pothole. That car has to say, wait a minute, there's a pothole, I need to drive around it. So that is where deep learning comes in. And again, for the purpose of today's conversation, we'll be focusing on artificial intelligence and machine learning. So again, can anybody explain this? Obviously, I'm not going to ask any of you to explain this, but this is how a machine learning model leverages algorithms to analyze and draw inference from data. So what does this all really mean? Input layer. Well, that's data. Let's just say an example as it relates to lending is number of inquiries in the last 90 days, whatever that may be. So there's your input layer. It then goes into the deep neural network, the machine learning model, where it's trying to find the relationships between those attributes to ultimately give you the output layer of, is this a good loan or not? Can this individual pay this loan out or not? So this is really what you're looking at here from a machine learning perspective. It has to have data. The more data it has, the better. It's trying to find those relationships. It's trying to find the attributes between that to give you that output layer. And again, the output is this going to be a good loan or not? And I'll get into more specifics about how we do that, how we measure that as I walk through this presentation. So here is a quick question for everybody. Which of these industries was first to leverage AI? If anybody wants to just unmute or guess or type in, I'll just give it a few more seconds. Yeah, if nobody's going to... Aviation. Okay, well, great guess, but it was auto. It was back in 1961, General Motors built a robot called Unimate, and it was responsible for transporting die casting from the assembly line to the welding of parts onto cars. So that was the most dangerous part of the process of the auto manufacturing. So yeah, I was shocked too that it was auto and it was General Motors back in 1961. So again, as you can see, AI has been around for much longer than I think a lot of us have thought it's been around. And financial services has been slow to adopt to AI. Three major areas where I think we're seeing a lot more of it is within the fraud, marketing, and customer support. So fraud, all of my years at PSCU, of course, the neural network, Falcon, trying to monitor transaction as that authorization comes in. Does this look to be a fraudulent transaction or not? But those AI-based solutions identify those irregularities and help find those cyber criminals. So I think, we've accepted that over the years for credit debit card portfolios for that monitoring of fraud. The same is true for marketing. AI now has allowed for personalization of credit card offers to be relevant. I remember back in all my years at PSCU, is it a transactor? Is it a revolver? Who am I going to send what offer out to? Back in the day, you used to have to spend a lot of money on postage and the mailing and the printing to say, hey, I'm going to mail this out to my membership and hopefully it'll stick with someone that resonates with that message. Well, today, utilizing AI and looking at data, you could tell, well, if this is a transactor versus a revolver, are they looking for rewards? Are they looking for cash back? What kind of individual member are you looking at? And make sure that you send them the correct offer for them to say yes to that. And a third place where AI allows institutions to deliver faster service is through customer support. I actually sat through a demo of a great, you called in, it asked you what confirmed I am who I am, what is my checking account balance. It'll say, what checks have cleared. It'll let me know that I have an auto payment coming up, and it takes care of everything. And it's really seamless, and and it works great. So. And that you could use 24/7, right? Once your office is closed, if somebody wants to call in and find anything out, if that's, some people might not do things online, some people might want to still call in, but it allows you to provide that service and the efficiency and that customer satisfaction 24/7, holidays, whenever that happens. So how do we help with AI automated underwriting to enable more accurate and equitable lending? Well, it starts with the desire for innovation. 98% of financial firms are exploring AI and machine learning. I think it's something that's here. It's something that's not going to go away, and something that all credit unions and financial institutions are looking at. Another desire for innovation comes from the members themselves. 82% of members want their credit unions to use modern technology. The reality is, if you can't pick this thing up and your smartphone and open an account or apply for a loan, a lot of people are wondering, well, if I can't do that off of that, what good is it? But it's not easy. And what do I mean by that? It's not easy to implement AI and ML. The first thing that's most important is to solve for explaining how the model was built, right? You have to have a model risk management report, fair lending testing, and I'll get into all that as we walk through. Second is to conduct that fair lending testing, method to the bias. The third, and very important, of course, is to monitor AI while in production. The fourth is to generate those adverse action codes. And as a matter of fact, just recently, the CFPB a few days ago came out with a circular speaking about, speaking to specifically guidance on AI model and adverse action reason codes. So, something that's top of mind, of course. And I'm happy to say that, we've Zest AI models are already designed to meet these standards. We're proud to be considered a compliance leader in advanced machine learning. And of course, create all the compliance documentation that's needed in order to be able to launch and drive a model as you're working with this. So time for another question. Who is the largest CU deploying automated underwriting using AI?
Golden One.
Whoever said Golden One is 100% right. Yes, Golden One is the credit union. Okay, so who is Zest AI? So we are a technology QSO based in Burbank, California. We've been perfecting the use of our AI-driven underwriting software for over a decade and a half now. If you look on the right-hand side of the screen, you'll see just some of the customers we work with, but you'll also see a name like Citibank, Truist, First National Bank of Omaha. So why is that important to you as a credit union? Well, those were the first financial institutions we started working with. So we were stress tested by some of the largest, most heavily regulated lenders in the country. So what that allowed us to do was really, again, be test driven by these financial institutions. So as our technology evolved over time, as we gained efficiencies, we back in 2019 made a conscious effort and said, hey, we want to be able to deliver the same technology that some of the largest FIs in the country are using to the credit union space. We want to be able to provide them that same technology. And again, as our technology evolved, as we've become more efficient, we were able to do that. So in 2021, we formed our QSO. And in 2022, we won the new QSO of the Year award from NUQSO for all of the work that we're currently doing in the space. So right now, about 96% of our customers are in the credit union space. We have over 357 active models up and running in credit unions today. We hold over 40 patents. The ones that I bring up is the patent for model explainability, which again, I'll speak to the model risk management report, and fair lending testing. So again, over 40 patents that we hold. As far as that concerns, we are owned by credit unions. The Circle Group, which is a group of 70-some credit unions, are investors in Zest AI, as are some direct credit unions as well. So again, as I said, right now, about 96% of our focus is in the credit union space, and that's where we're growing day by day. So credit challenges. I speak with lending individuals, leaders every single day, and all these resonate with them. And first, the one is, why is there lack of accuracy and increase in charge-offs? Well, middle tier risk assessment is a coin toss. I think we can all agree, if I'm a member of your credit union and there are 3 of us who apply for a loan on the same day, and I score a 660, member B scores a 670, and member C scores a 680, is that 680 any better than my 660 or 670? For that matter, pick any score in the 600s. With the current national credit score that's there, it's very difficult. I once had a meeting with a chief lending officer. She and I had a great conversation, and she told me, Roman, one day one of her underwriters came in and he asked her, what should I do with this loan? And she said, well, what do you think you should do with this loan? And he said, well, no, I don't know what to do with it because I just don't have any clarity. And she said, well, no, again, I want you to tell me what you would do with it. They went back and forth. So ultimately she said, well, pull out a coin and choose. If it's heads, you'll give them, or tails, you'll give them the loan. If it's tails, you won't. Not that that's how that she was going to base it on, but she just wanted that underwriter to make a decision. Again, she would have overridden it because, again, there's just really no confidence. I'm sorry, I jumped a slide. There really is no accuracy in that middle tier assessment, which leads to underwriting is inefficient and slow. 83% of credit unions still return decisions in 30 minutes or more. Now, I think we've gone from I'll go back to my days working at the credit union part-time. I'm sure some of you remember credit committees, right? Well, at the credit union I worked at, they met every Tuesday evening. They sat in the boardroom. The loan officers would prepare the application. They would run the credit, bring in the manila folders, put them down on the conference room table, and then make a decision. Are you going to be approved or aren't you? Again, we've gone away from, once a week. And as a matter of fact, this credit union, they had to meet on Tuesday nights and Fridays as some volume came up because they just couldn't keep up with it. But we're still not where we need to be as far as I'm concerned, as far as being able to return a decision very quickly. And 1 in 5 members are being left out. It's very difficult to score them. And ultimately, it's tough to compete. Fintechs are taking 50% of that market share. As I mentioned earlier, your members are bombarded every single day from fintech companies, fintech lenders on social media, television, via mail, and they know that they can get a decision in a second. Now, granted, they're willing to pay more points, higher interest rate, but they want to know instantly, am I going to be approved or not? And as I've been saying, it's not a luxury anymore. It is a necessity for credit unions to provide these services because, again, that is what your members are looking for. So how can the Zest AI technology help you future-proof your business lending? Well, first of all, you can navigate uncertainty with confidence. We were 34% more accurate than industry scores during the Great Recession. We built a time model, and I'll speak to that in more detail as I walk through the presentation. Boost efficiency, 80% of applications are auto decision. Drive that inclusivity and consistency, confidently assess 98% of American adults. And ultimately, as I mentioned earlier, something that your members are looking for because they're hearing it everywhere, improve that experience by giving decisions in a second, let alone seconds. So leveraging automation to broaden the pool of members that can be scored. So next, I'm going to speak to the 3 pillars of Zest AI. The first is smart. How can we help you make those better credit decisions? The second pillar, inclusive. Again, make sure everybody gets a fair shot at credit. And the efficient, to be able to deliver those decisions quickly. So the current national score everybody's using was designed in the 1950s and released in 1958. And it's looking at limited data points, 20 to 25 data points. That's why today a member is just viewed as a number. As I mentioned earlier, was member C's 680 any better than my 660 or member B's 670? The answer is you really don't have any idea. And again, it's because of that limited data. A great example would be if our neighbors, Chris and Melanie, came back and said, oh, we finally bought that piece of land in Flagstaff. We're sick and tired of the 115-degree heat in the summertime. We want to escape. And we've designed our home and all this kind of stuff. And it's the most beautiful home you'll see, Roman. And my response to them would be, okay, Chris or Melanie, explain it to me. Well, if all they were able to tell me is it has a ceiling and windows and a door and a roof and a chimney and bedrooms, I'd be like, okay, well, so does your house across the street and so does mine and so does everybody's that's listening to me. What is it that makes it unique? Or if you went somewhere on a vacation, if I asked you to explain the beauty and what you saw and what made it so special in 20 or 25 words, it'd be very difficult. So that's where, as I mentioned earlier, math, well, not only better math, but more data. And that really is the secret sauce, if you will, behind the clarity and the ability for AI and machine learning is better math and looking at a lot more data. So there are 3 primary areas where we gather data. The first is from the Credit Bureau report that you're currently purchasing today from one of the 3 major bureaus that are out there. There are over 8,500 data points within that raw credit extract, as I mentioned. That's number 1. Number 2, member data. Of course, we can take in member data to look at things that you currently have on your member. And the third is third-party data. Important thing to remember there, things like LexisNexis, but it has to be FCRA compliant data. Now, since every credit union, every model we build is different and unique to each credit union, when our data scientists and data modelers build a model for a credit union, a lot of it starts with that raw credit bureau. Again, We build typically, our models are built between 180 to 300 data points, the most performant data point. So we look at things like your geography, what areas are you serving today, where potentially might your footprint grow and extend in the future. Because again, I live in Arizona. People will transact differently here than they do in Vermont, than they do in New York State, upstate versus the city, so forth and so on. I can go throughout the entire geography. So again, depending on the credit union, depending on what needs to be built into the model, it all starts with that raw credit extract. Then member data can also be brought in, and then again some third-party data. And that again is what allows us, the better math and more data, is to give a complete view of the member. We have a much larger look back window, so we can provide clarity on the score. And with that, you can lend more confidently. As I mentioned earlier, what you're looking at here, so back in so we went back and built a time machine. We actually built a model, and we trained data from 2005 and 6 and blind tested it against 2007, 8, and 9, the Great Recession period. And what you're looking at here is a chart. The red line represents the current industry score, and the green line represents the Zest AI score. As you could see, the Zest AI score was 34% more accurate at predicting risk. Again, what's going to be a good loan versus a bad loan. And if anybody's interested, you could just search, go online, type in Zest AI time machine, and you can find we have a whole write-up about with a lot more specificity. But again, very interesting results that we saw by doing that. And again, we help reduce that middle tier ambiguity. So this is just in general, overall, Zest AI lift over industry score. We're 2x more accurate across all the tiers, but especially in the middle tiers. What you're looking at here is a KS score. A KS score is a measure of statistical accuracy of which loans would go DQ 60 in the first 24 months. Again, a measure of statistical accuracy of which loans will go DQ 60 in the first 24 months. As you can see, the Zest score there's a 2x lift overall in the Zest score across all, even in the A+ and A, where again, I think we can all agree, if I walk in and score an 800, LTV, DTI are in place, okay, I'll get approved, or that member will get approved. But so the higher the KS score, the more accurate the model is at predicting that default. So because of that, it allows you to provide more access and increase your approvals by 25%, if not more, without added risk. Again, you're holding your risk constant during this entire time. So number 2, inclusive. Again, how can we ensure that all of your members get a fair shot? Well, it starts with consistent lending and increased fair access to credit. How? By utilizing models that are optimized for both fairness and accuracy. Again, utilizing these models. The reality is today, there's still a lot of manual review that's happening. And in that manual review, there's a lot of inconsistency, right? I'm not saying it is what it is. There's just not enough clarity there for the individuals that are looking at that score to really be able to make a consistent decision, because it's just, it's not clear that there is no consistency there. So again, utilizing auto decision more consistently, trusting the AI and that smart credit policy that it overlays on top of it will drive that uniform, drive those uniform decisions, I should say. 80% of applicants can be auto decisioned. We have some credit unions today that are over 90% auto decisioning. Again, we work with you as an organization to, if there's almost no automation or very little, we work with you to make sure that you grow at the rate you'd like to grow. But again, as mentioned, we have some credit unions that are over 90% auto decisioning on their loan applications. And ultimately, that allows you to help serve the underserved. 40% increase in approvals across protected classes, which means more access for women, seniors, and people of color. So the third pillar of efficient, deliver more decisions faster. So again, what are we looking at here? With instant decisioning due to accurate scores and optimized credit policies, that allows you to be able to provide that automation. The first set of green and gray circles you're looking at is a current policy at a credit union. Within that policy, there is a lot of overlap. And within that policy, there are even things that give absolutely no signal. So how do we get to that optimal policy? Well, again, our team works with every credit union to make sure we look. Typically, a credit union, if there's any automation, has a decision tree within their LOS. And within that LOS, let's just say, for example, there might be 10 steps somebody has to pass through in order to be auto approved. But if you trip one of those 10, you're done. Our consulting team, our client success team, when they come in, they work with you and say, you know, out of these 10 that you have in place today, you can remove these 7 because we're using better math and looking at a lot more data. We've shown you that these 7 can be removed because of that larger look back window and all the data and information we're getting on that member. That allows that process to come through. So that, again, that is what provides you the efficiency. That is what provides you the ability to do that. Because again, as that Zest score comes in, it comes in through your LOS, it automatically gets transferred to our software and then goes right back into your LOS where the custom score field is for the score. And that's what allows and drives the automation to be there. And if needed, there's also an area for the 5 adverse action codes, if needed for that specific thing. But again, because of the way we help optimize that policy, that drives that efficiency to be able to say yes faster. So do more with less manual review. You can save up to 67% of your time and resources in your lending process. Again, there will always be loans that will need to be reviewed. There will always be loans that, you know, will have to have a set of human eyes at them, but not as many as there are today. The efficiencies that our credit unions see and gain and the confidence that they have is just tremendous. So again, we're there to help you do more with less. And as I said earlier, ultimately delight that member. They are aware that there are places they can go to get a decision instantly, and that is what they are looking for. Again, faster decisions to be able to provide that. So everyone wins with automated underwriting. So how does it help you, the credit union? Well, improve your lending economics, right? You can increase your efficiency. You can safely go to those middle to lower tiers where it's very difficult today to make a decision, right? So not only growth, no matter what, even if growth is not an area that a credit union might be looking at today for whatever reason, but there will still be members that always will need a loan. And again, you can safely go to those tiers where you typically couldn't. There's, of course, a higher yield, and you're still providing a service that your members are looking for. So increase in efficiency. You can increase your competitiveness. Again, like I said, your members being, you know, bombarded every single day on social media, television, everywhere else about, hey, get a loan here, get a loan there, and get a decision in a second, right? So that'll provide increase. And as I said, you know, a credit union can have a huge marketing budget, but if a member actually went and applied for a loan and was instantly decision and got a yes, I think, you know, that marketing budget can't meet the happiness of that member running around telling everybody, hey, can you believe I just got approved for X loan from my credit union? You guys have to go there. They're great. And it's what people are expecting and looking for. And again, expand access, be able to provide access to everyone. Again, as the credit union motto said, people helping people. So again, what does that mean to your members? As I mentioned already, more members have access to credit, consistent and inclusive outcomes, lending decisions within seconds, and more yeses for more members. So that really was the presentation for me today. If anybody has any questions, please let me know.
If anyone has any questions, you can unmute yourself or you can put them in the chat and I can read them to Roman.
And if somebody, and again, I'll ask Dean to send out my contact information. If anybody has any questions for me afterwards, by all means, please feel free to email me or call me. More than happy to discuss further.
I have a question.
All right, go ahead, Ken.
All right, so you said that are you creating a neural net model for each credit union, or is there a main model and then you're layering custom credit union data on top of that?
Great question, Ken. That was you, Ken. Yes. So yeah. we have a pro model and we have a select model. Again, it's open to every credit union, but yes, we do have models typically that the larger credit unions are utilizing that are custom and specific to them. We also have a solution select where it is for the smaller consumer loan portfolio size credit unions, because we wanted to make sure that this solution is available to everybody. Where it's more of a regional, it's still looking at the region you're working in. Again, the territory you're serving today to territory you might be potentially wanting to serve tomorrow. But yeah, we do have the two ways of attaining the solution. It's open to anybody, right? I mean, even a smaller credit union could want a custom model, but again, we wanted to be sure. But for the larger credit unions, yes, it is custom to them. It's specific to them. So if you walked into credit union A, B, and C, it'll be different because each credit union is unique.
Because it just seems like for a smaller credit union, I'm not sure that they would have enough data to feed into the model in order to get good results from that, right? Because with neural nets, you have to have extremely large data sets, and that's fed into the supercomputer to crunch and then outputs the model, right?
So that's what we do for the smaller. It's like I mentioned, it's a national yet regionalized model that we've built for the smaller credit unions. So when we built that model, we're looking at millions of records, because when we train the model, the best way to explain it is, if all we ever did was look at the through your door members that applied for loans with you already, our model would be great at that, right? But what's the purpose of the model? That if I move now from Arizona to Connecticut or Vermont or somewhere like that, and I can become a member of your credit union, but you've never seen me, the model has to be able to look at me correctly and say, is Roman a good risk or is he not? So to your point, no, we are, even for the smaller credit unions, those models are built upon millions of records. So we're looking at geography, we're looking at regions so that it's trained properly. So yes, it's the same concept, but at a different level.
So are you back training that on, say, a bunch of old lending applications and then looking to see how humans would have underwritten that? Or are you looking at which ones went delinquent? Or what are you using to, tell the model that that it made it more the output
the right
more
decision
accurate?
Yeah. So if we go back to here, the KS score, this is exactly what we use. As I mentioned, this is a KS score. It is the measure of statistical accuracy of what loans will go DQ 60 in the first 24 months. And as I said, the Zest score outperforms, and that's how we measure that. But a very good question.
Okay. And then, so what are you running? I'm just kind of curious, like, what are you running under the hood for this? Do you have a data center full of NVIDIA A100s, or is you using like cloud?
It's cloud-based, but what the A1, that's sort of that. I can get those answers for you, but that's over my my technical genius. But no, it is cloud-based. It's a SaaS model, delivered that way. But the A100, I'm not sure. But if you'd like, I can get an answer for you on that.
That's all right. I was just curious because I know it takes a good amount of compute to run all these models. So
well, like I said, so just to reiterate on that, so we've been doing this since 2009. And as I said, so Citi is still a customer of ours. First National Bank of Omaha, Truist, Freddie Mac uses our tools. So, like I said, we've been stress tested by the largest financial institutions. What I mentioned earlier, the MRM, Model Risk Management Report that we provide before any credit union goes live with us, they get a Model Risk Management Report, which from a regulatory and compliance standpoint, you're fully covered. You get fair lending testing before you go live with us, where you're fully covered again from a regulatory and compliance standpoint, because again, it's fully transparent. Like I said, it's supervised AI. So when the model is built, when the regulators come in, any auditors, you can provide that 150-page, give or take, however big it is, and say, here's the report, here's what it's doing. And again, we've been ahead of the curve with everything that the CFPB has come out with. And again, very happy to be considered a compliance leader in the advanced machine learning space.
Got it. Cool. Thank you.
Any other questions? I guess we have a shy group today.
I'm sorry. I have a quick question, if I could.
Sure.
And you touched on this. I'm just wondering if you could go over it one more time for me, so I'm kind of sure of where it is. Where does this lie? You mentioned the information flows into the LOS. Is this a separate platform that we're connecting up? How does that flow?
Sure. Great question. So again, we are integrated with the majority of the LOSs that are out in the marketplace today. So we live within the LOS. So there is no additional platform you're buying from us. We ourselves are an LOS. We are just the score. So the process, how it happens, if I'm a member, I walk in, you pull my credit, right? That comes in, it automatically gets thrown to the Zest AI model. And within a second or millisecond, actually, it comes back and throws in the custom field within your LOS, the Zest score, and then, as I said, if needed, 5 adverse action codes. So there is no additional layer of platforms you need. With the LOSs that we have native integration, which again, I said are majority there, I can honestly say, coming from my years at Fiserv on conversions, coming from my years at PSU where you had to move one issuer to another issuer, yes, there were conversions. Yes, it was not easy. I'd be the first to say that. But this is the first time in my life I can actually say, when we have the native integration, which we do again with the majority, there really is no IT lift from you. All the credit union does is call their LOS and say, hey, we've decided to work with Zest. They're like, okay, we'll turn on your custom score field and the 5 adverse action codes. And then all they'll do is just send, okay, let's just test to make sure you're getting it and you're good to go.
That's very helpful. Thank you. Yes.
Sure.
Any other questions? Right.
Okay.
Don't see anyone raising their hand. So, Roman, thank you very much for your time today. I will make sure that I share your contact information. So if they think of questions, you can reach out to Roman directly. If you want to reach out to me, I'm happy to put you in touch with Roman. This webinar was recorded, so we will be sharing the link. So if you want to share it with any of your teammates that are interested in learning more about what Zest AI can do for your credit union, you should have that link available to you within the next few days. Roman, thank you for your time. I appreciate it. I'm glad that your weather is now, livable.
Thank you. Thank you. Thank you everyone again for your time. Greatly appreciate it. And please don't hesitate to reach out to me if you have any questions.
All right. Thank you, everyone. Have a great afternoon.
Thank you very much. You too.
Bye-bye.
Bye.